So I was just at Money 2020 and I could see plenty of enthusiastic VCs there around fintech. But what are you focused on? What sectors are hot right now for VC?
Yeah, I would say we continue to be very active in the bread and butter industries of the VC ecosystem, which is software, fintech, consumer, e-commerce, prop tech, and all combinations in between. In particular, we're seeing Europe mimic the US in terms of the sectors attracting investment activity and entrepreneurial activity. So very much similar to what we're seeing in the US.
So just something jumped out to me around the fintech sector was that while some have great ambitions to IPO at some point, many of these companies are still in their infancy, very early on in their journey on raising money, and there was no shortage of cash behind the scenes either. Is that where we're at? We're really in this cash raising era for a lot of these new companies at this stage, and there really is no rush to market.
Yeah, I would say we're seeing such robust private equity and private debt markets such that VCs, they have significant amount of capital under management, capital they've raised, are actively deploying their capital. Venture lenders like myself in particular are very excited about fintech. We have a great fintech portfolio here in Europe, Revolut, Monzo, and Tide, and so have access to leverage from parties like us, and then a considerably strong private and late stage market where companies are able to raise significant amounts of capital. I think there are over 70 unicorns here in Europe, and so there's no rush to go public for capital raising purposes because of the robust private markets.
Sajal, just explain to us though what happens as interest rates go up, or at least monetary conditions tighten. How is that going to change the maths that investors do when it comes to VC returns and whether they're willing to pledge to new funds?
Yeah, I would say at least the VCs that we work with, again, we're a lender, so we complement the equity capital that these top tier VCs deploy, but their returns, their track records continue to be so impressive such that gradual increases in interest rates are not going to detract from their ability to raise new funds. I think what we'll see is with interest rates rising, we'll see the non-traditional investors, I call them the tourists, the hedge funds, the sovereigns, folks that came into the late stage venture market, huge rounds, huge valuations, they'll now probably deploy their capital in other sectors, which actually I think is a benefit to the VC ecosystem and valuations and managing your balance sheets appropriately.
Clearly, the IPO markets are not as positive as they have been. I think we saw our own Jim Cramer advising people not to get involved in an eyewear company that's going to market currently because of concerns about the recent performance of fresh IPOs. Are we getting to a stage, do you think, where the window is closing for exits onto public markets?
Well, I guess I would contrast that. Last 2 weeks, we've had two portfolios go public, traditional IPOs, not SPAC IPOs. We have a number in the process of SPAC IPOs as well, and both traded particularly strongly. I think what's exciting, in particular in Europe, there's been 47 billion of exit activity this year. As we said earlier, that's surpassing the best year of 2018. And so I would say we're seeing traditional IPOs, we're seeing SPAC, we're seeing M&A, and I would say, at least for the better venture-backed companies that are having these exits, they continue to perform well.